Welcome to Yahoo Finance's latest weekly special, Let's Get Real. Is it time to buy or sell? The housing recovery is in full swing. New home sales data posted this week showed a 16.6% gain in May over April. Mortgage applications are 18% higher than they were a year ago. So where does real estate go from here, and how is the industry adapting to a COVID world? Let's bring in our first guest, Spencer Rascoff. He's an entrepreneur. He co-founded Zillow. He served as the company's CEO for a decade. He's now an active angel investor in over 50 companies and serves as executive chairman of dot.LA. So Spencer, real estate, I think it just ground to a complete halt. I think a lot of people have been surprised at how quickly it's come back. Is that something that we're seeing across the country? Like, how big of a V trajectory is this, do you think?
It has bounced back incredibly quickly, I think more quickly than anyone thought. So just to throw some numbers at you, listing page views are up 50% year over year on for sale homes on Zillow, for example. So there's tons of interest in buying homes. Now, transaction volumes are still down a little bit. It's going to take a couple more months to get fully back to normal. But people were cooped up for a couple of months. Interest rates are historically low, and home shopping is in full swing.
So when you go home shopping these days, it's different. Look, so open houses have been able to start up, but there were the virtual open houses. And we've talked before when we had you at our On Market Summit a while back, just about where is real estate going? Is it going to be like you can point and click and buy a house? And we're seeing these huge technological shifts. Do you think that we're getting closer to that? Is this time of advancement making big strides in real estate, as well as what we're seeing and how we're all working from home?
Yeah, look, COVID has accelerated a lot of trends across our economy that were already underway. So food delivery, grocery delivery, growth of streaming services at the expense of movie going. These trends have been in place for 5 or more years, and then COVID has dramatically accelerated it. That's what we're seeing in real estate too. So things like virtual tours, transaction management that's entirely online, online mortgage origination, 3D home listings. These things have been around for the last couple of years, but we're now seeing a big acceleration in those trends as a result of coronavirus. So I think, that is a good thing, in my opinion. Most of those innovations that have come to real estate are long overdue. And if anything good can come out of this pandemic, it should be and could be an acceleration of these tech trends, which I think are great for the consumer and for the industry.
And Spencer, another trend that everyone wants to say is happening is folks like me, millennials growing up, leaving cities, going to the suburbs. As far as what we've seen so far, does that seem real to you? Because it's been a burgeoning trend for a while, but is this really the time it's going to happen?
Yeah, so the media is talking a lot about this, right? And the short answer is it's a little too early to know whether this is real or this is people just extrapolating anecdotes. So there are two types of relocations that I think about here. One is people staying in the same metro area, but leaving a city center to move, say, 30, 60 minutes away. So as a result of work from home, if I don't have to be in my office every day, I can be there 1 or 2 days a week. Well, maybe I can live in Calabasas, not Santa Monica. Maybe I can live in, upstate New York, not in Manhattan. Okay, so that's one trend. The other is people just picking up all together and saying, I don't want to live in the city anymore. I don't want to live in New York. I want to go live in Boulder because I can remote work all the time. That first trend, I think, is real. I think that work from home is real and permanent, and you're going to see people contributing to this kind of suburban sprawl, 30, 60, maybe 90 minutes away from city center and just commuting into the office maybe 1 or 2 days a week. I'm very skeptical of the second trend. I think people are talking a lot about it. Hey, I can go live anywhere. Why not move to Hawaii? I've always thought about moving to Hawaii. I don't think I don't have data yet, but I'm pretty skeptical of that one.
And then to kind of follow up on that first point, I've noticed it in my apartment. Obviously, we didn't plan to work from home in 600 square feet, but I feel like in every home, you now need to think about what would it be like if I'm here all the time instead of just some of the time. How do you think that might change expectations, not just square footage, but this appliance needs to be nicer or the chairs need to be comfortable, stuff like this?
Oh yeah, so this is a trend that home builders are already trying to wrap their mind around. Home builders and remodelers. I have a beautiful home office. I don't have a door on my home office because this is a very like open floor plan-y kind of house. That never bothered me before. It was great, pre-quarantine that the kids could just kind of come in and in and out as they see fit. Well, I would kill for a door now. I'm seeing home designs now where people are building out kind of like audio pods where there's really good sound, almost like a sound booth for taking calls and doing video conferences. I mean, whoever thought they would be building things like that into their house. So we're definitely going to see some different home building trends as a result of work from home from post-COVID.
Yeah, I think some of them are calling them Zoom rooms. I want to get one.
I do too.
And they have doors. Okay, so do you think there's going to be consolidation in real estate? I guess we've been seeing that with a lot of agencies already. Is the industry going to go through changes aside from just the technological ones? And then is that going to ever impact the brokers in any way and the fees that we all pay?
Oh, the fees. We always end up on the fees. So let's see. The relationship between the agent and the brokerage has changed a lot over the past 5 or 10 years. So agents used to get a lot of things from their brokerage. They would get office space, they'd get branding, they'd get lead generation, they'd get software tools. And over the last 5 or 10 years, a lot of those services are no longer provided by the brokerage exclusively. They're now provided by sites like Zillow or Facebook advertising or coaching, where a lot of real estate agents hire their own personal coach. And so that relationship between the agent and broker has changed a lot. And the split, in other words, how much of the commission the agent keeps at the expense of the brokerage, that has changed quite a bit in favor of the agent. And that is starting to drive consolidation among brokerages as well. Totally separate from that, there's the fee that the consumer pays, right? The 6%, which is much higher than it is in other countries, where it's typically 1 to 3%. And I haven't seen that change very much. And the reason for that is that most transactions in the US still have 2 agents in the transaction, whereas in other countries, there's just usually 1 agent. In the US, there's buy side and sell side representation. And so that commission has stayed pretty steady in the 5 to 6% range, despite the growth of technology. But don't think that there isn't a lot of disruption happening in the real estate industry. There's plenty of disruption in terms of which agents are successful, how much of the commission they keep from the brokerage, how consumers are empowered, and now increasingly what types of technology tools these consumers are using when they actually home shop and buy. And so much of that is becoming more digitized as a result of coronavirus.
And before we go, I want to ask you about dot.LA because you're out there. It's a new project that you have going on. And look, we're in New York, and we cover the whole country, but we're more intimately familiar with what's happening with the economy here. We've had a ton of guests though before COVID hit out of LA. The startup scene was really hot. What are you seeing in terms of the economy in LA right now? Is it still a hotbed for entrepreneurship, or has that cooled?
No, LA is on fire, and that's why we started .LA, to try to shine a light on all the innovation and all the technology startups that are doing great things here. I mean, in LA now, we have a robust founder and angel investor scene. We have incubators, we have venture funds, we have late stage venture funds. We have unicorns, companies like SpaceX and ServiceTitan and Relativity Space, ZipRecruiter, Headspace. We've got big public companies like Snap and Cornerstone On Demand. And then many of the major Silicon Valley companies now are in LA in a big way, whether it's Facebook or Google, or of course Netflix, which is for all practical purposes now headquartered in Los Angeles. So LA is happening in a huge way.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.